Okay, let's have this prompt. We welcome our viewers here in Nigeria and around the world to this special edition of Business Incorporated. I am Bosin Omofaye here in Lagos. Today, Nigeria's central bank announces its final monetary policy decisions for the year 2019, while Kenya's central bank cuts its policy rates after scrapping the contentious bank's interest rate cap on lending. Plus, Alibaba shares surge in Hong Kong debut, making it the world's largest listing so far in 2019. So let's get the show started from East Africa, where Kenya's central bank on Monday cut its benchmark lending rate for the first time in more than a year, saying the tightening of fiscal policy had provided room to ease interest rates in an effort to stimulate an economy operating below its potential. The bank's Monetary Policy Committee cut the rate by 50 basis points to 8.5% in its first meeting since the country lifted a cap on the controversial commercial interest rates. The Central Bank Governor, Patrick Njoroge, says earlier this month that the scrapping of the interest rate cap had removed one of the concerns the regulator had about cutting the benchmark. So let's check in with the European markets, trading slightly lower in early trades today, despite optimism over the progress being made in the US-China trade dispute. My colleague of DWTV for Channels Television, Ulrich Barth, is standing by now at the floor of the Frankfurt Stock Exchange in Germany and is joining me for this markets conversation. Good afternoon and welcome to the show. Ulrich, let's get started from Monday, where the Wall Street finished at a record high, but stocks in Europe are not following that lead today, teeing off in the negative territory. What's the reason for that lack of enthusiasm, as it were?
On the one hand, it's yesterday's news, lots of merger activity and optimism, at least hope on a trade deal with China, at least a phase one deal happening sometime soon. And now that optimism is being somewhat colored by new remarks from the Commerce Ministry in Beijing, which are seen as vague, the wording not providing enough details, and then skepticism surfacing again, and not the same kind of merger activity as we saw at the beginning of the week. So the markets in Europe basically treading water, some on the negative side, like here in Frankfurt, and some on the positive side, being flat, like in London.
But this is a week of Thanksgiving holiday in the U.S. It's a Thursday, the Black Friday also at the end of the week. So do we see, is there likelihood that European markets will turn around a little bit, get in the mood of the holidays, get in the mood of the Thanksgiving, the Black Friday, and begin to trade north, at least between tomorrow and Thursday?
It's very likely that they'll get in the mood for the Black Friday as numbers start rolling in on the kind of purchases that are made. But, you know, I think Thanksgiving, that'll give markets a reason for pausing. And that also could be actually behind the reason now that the market is flat, is lackluster. They're expecting all those big investors, basically when the United States comes to a halt, to be absent. And it's a bit on the risky side to stick your neck out.
Yeah, so Ulrich, I'm sure you're doing a few shopping yourself. So what does that tell us about this holiday shopping season, going by the latest numbers from the GfK for Germany?
The consumers here in Germany, according to this poll of 2,000 consumers asked directly, is a bit more optimistic, but it's not really at the high levels that it was at its peak. It's rebounding now from a 3-year low, but still consumers polled say they are more upbeat about the state of the economy. So I think that the retailers hearing this will be hoping that that will translate into euros and cents being spent in the holiday season.
Okay, great. It's good to have you through the rest of the week. Ulrich Barth, thank you very much of DWTV for Channels Television live from the Frankfurt Stock Exchange in Germany. Okay, let's have this prompt.